Hey traders, Raghee here. There we go, camera would be good. Welcome to Charts and Coffee for Tuesday, December 26th. Hope everyone had a very happy Christmas, had a nice day off, and is recovering from, I don't know, getting up super early Christmas Day or staying up too late Christmas Eve, and whatever combination of naughty foods were eaten. I know that was definitely the case here in the Horner household. And we've got this week now to contend with. It's the first of two shortened weeks that we'll be dealing with. And of course, this one winds down 2023. And obviously, next week, we come back on January 2 will be the ramp up of the fresh week. So one of the questions that I've been getting as we get to this funny part of the year where we're going into end of year, jockeying around for position, and then the new year, what type of sector rotation and or continuation, what might we see? And remember, gang, sector rotation is the opposite of continuation. Sector rotation is the opposite of participation. So what might we see? First of all, we're going to continue to expect Santa to show up. I know it's after Christmas, Rog. What gives? The Santa rally is basically the last week, and that's going to take us from Friday the 22nd to Friday the 29th of this month. Oftentimes, the Santa rally even rolls into next year, and oftentimes that's really the last bit of retail buying after watching December or the last part of December rally. Retail investors, retail traders will get long into the new year. I do not recommend extending the Santa rally, even though the tendency is for going into the new year. I would not recommend a lot of aggressive buying as we go into 2024, but rather day trading what could be some strength. What else are we gonna prepare for as we wind down the new year? Gang, don't forget that at the end of every month, this one included, there are going to be those scheduled redemptions, and that's usually most intensely the last 3 days of the month. So as we go into Wednesday, Thursday, Friday, I won't be surprised to see those redemptions start to hit, and maybe even profit taking on those traders that have long positions or long calls that they've had throughout the month of December. And as we go into December 29 expiration, we could see a little bit of exaggerated movement, not like a third Friday of the month, not like options expiration, OpX, but we could see that, well, it's the finality of it, right? As we go into 2024, I have seen more bearish, recession, massive correction. I've seen a lot of that. I've seen a lot of the that kind of chatter headlines. Hey, look, gang, that's just folks trying to get your clicks. That's just folks trying to get your attention. They have advertisers to please. So be careful, gang. We are ending the year at new highs in the NASDAQ. And these clowns are still running the same fear-mongering nonsense that they've been running all year long. So beware. I've seen more of that the last handful of days, and maybe because I was just looking. Avert your eyes, but I've seen a lot of that as well. All right, so let's get to it. Let's see what we've got and questions. All right, let's see. I did. Thank you all. We did have a very nice weekend. I appreciate that. I do. Will volume be low because of the holidays? I would suspect it's. I don't want to say it's low, Gru, and I don't want to predict. But what I would anticipate is that it's going to be spotty. So let's go to the economic calendar. So if we have spotty participation volume, what would that really be? A part of? Well, obviously bank holiday yesterday. Look, there's a significant amount of bank holidays today, right? We have a lot of bank holidays even today. In terms of the illiquidity coming out of the European market, remember that London fix is still an accounting reality. It's still a settlement timing, and even though Germany, it's Italy, UK are all closed. Oh, Switzerland's closed too. I would still anticipate a little bit of that, but not as punctuated as normal. We go into tomorrow. Not a lot of major data. US has Richmond Fed. So might we see these little bits of nothing red hot in terms of a hot zone? So whatever is sort of orange hot, Richmond Fed, pending home sales, unemployment claims, Chicago PMI, those are going to be about as significant a hot zone as we're going to get. I don't believe the data is going to be what drives the psychology this week. It's going to be very much the end of year. End of year is challenging because what we're going to see is, if there's going to be any tax loss harvesting, which of course there will be some, that is not going to be my focus at all. But if there is going to be some, please don't bottom pick. Please don't look at sectors and stocks that have struggled. Please don't look at sectors, especially as of late. Please don't look at stocks that are still below their 200 exponential or below where they started the year, negative on the year. Please don't focus on those. Just continue to expect follow through on those strong names. And that's the way I'm going to look at this week, very nimbly and still very bullishly. Although, in fairness, I've looked at the entire year that way. So why change now? But beginning of 2024 will be different in that regard. All right. Do I want to predict volume? No, but it's going to be spotty. And that's why. Group. All right. Next up, this year, are Jerome Powell and Santa the same person? Look, we're seeing a pivot from the Federal Reserve. And if Jerome Powell does want to don the red suit, he has. All of the voting Fed members really have. They've been supporting a much more dovish outlook in the Fed fund futures, our target rate probabilities, those things that are a futures contract where traders could actually place a bet with a futures contract, putting their money at risk to make a play on the Federal Reserve cutting rates. I mean, we're still looking at March as a very strong possibility for rate cuts. And so, yeah, it's hard to hate on a dovish Federal Reserve. It's hard to bet against the dovish Federal Reserve. And again, we're seeing evidence of that everywhere. Equities are up. Dow, Nas, S&P, all in uptrends, all above their Jan 3, 2023 opens. So they're up on the year, above the 200, in uptrends. Euro is in an uptrend, which means dollar is in a downtrend. ZB, the long bond, is showing lower yields as it moves higher into an uptrend and is above the 200. ZN, the 10-year, it is also in an uptrend above the 200. These are all the signs of a coming dovish central bank. Weaker currency for the country that's going to cut rates, lower yields for the country that's going to cut rates, and equity markets love that stuff, right? Okay, so that's what we've got there. So yeah, all the evidence is there, Christian, that's the case. PP Family asks, do I always take single leg option strategies? Correct. I just look at long calls and long puts. So I always day trade the options. I don't always anything, PP Family. If I'm day trading, then I'll be out by 3:50 p.m. And if I have a swing trade, I will do that. So nothing is always. Do I ever buy leaps? Yeah, I will buy leaps from time to time, or swing trade using options. PP Family, if you've been watching the show for any length of time, you know that is the case. Leaps, not that often though. All right, next up is, let's see, CL Munir. Yeah, let's take a look at crude oil and the surge that it has seen. Now the surge we have to take within context, right, gang? What is the momentum? What is the trend? Now, we can call it any number of things, but momentum is really that short-term movement of higher highs and higher lows. If those continue, bullish momentum really is required for a bullish trend. You add in some volume, and now you've got the building blocks of a trend that could continue, that has some longevity. So then ultimately, when I'm looking at CL, so let's look at CL, Munir. There we go. If I'm looking at CL, I ask myself, where is it in relation to the year? That's the year mark right there. Look at the 200. Look, it's having a good day, shorten the time frame, 1 to 3 day time horizon, perhaps day trading. But of the things that I was looking for, and I don't actually know what your question about CL is other than the symbol, but I would say I'd remain fairly short term, if not still kind of bearish, despite the recent move and break of the downtrend. Don't know if that was your question, but I would be bearish. Yeah. All right. PP family again. I saw that Nancy don't care. Moving on. Really don't care. Seriously, PP family, what am I going to do with that? Look at the chart, set it up. If you've been watching this show for any length of time, you know I don't care. If there's volume, I don't care who the volume is. If there's volume, I'll play it. All right. Next up, just another year, and shout out to my staying grounded, don't follow the FOMO. Alex, I'll tell you, in terms of, yeah, in terms of fear of missing out and the joy of missing out, right? We're not going to catch every trade. We're not going to catch every trend, but there's always something happening. A trader's best friend, especially a day trader's best friend, is always the very next day. So I appreciate that. Thank you, Alex. All right. PP family, just because you can ask the questions doesn't mean you need to ask them 100 different ways. My friend, long calls, long puts. What is better? Don't know. Don't know. It's whatever you like, right? It's whatever works for you. All right. When I say a swing trade, when I say trade or swing trade, do I buy at the money? I do buy at the money. IWM. Hey there, T-Money. Strong sector performance indicating massive risk on. Well, IWM is an index, right? IWM. So if I'm looking at the, let's go to the charts. So if I'm pulling up RTY, which is our futures alternative of the IWM Russell ETF. So when we think about sector, yeah, I think about KRE. I definitely know about KRE. In terms of strong, here's where I'm torn, my friend. I really can't short the Russell, right? You can see the green trend. You can see the green momentum. And you could see the fact that, all the criteria that I would want to look for in terms of a transition to more bullishness is there. But the number one weighted sector for the Russell are regional banks. And, when I'm looking at a green trend in the Russell, it is above the 200, but it's not quite above the year. We need to clear 60 for that. I'm a little hesitant. So what I would say is, again, I don't know where. So I don't know what you mean by massive risk on. Are you of the camp that the Russell leads? So T-Money, if I don't quite understand what you mean, indicating you mean for the Russell, risk on for the Russell. Yeah, I would limit IWM's bullishness to IWM and the Russell futures. So is it risk on for them? Yes, just temper that with the fact that regional banks are still below a hurdle that would be considered. Yeah. And gang, yeah. So you're asking if the Russell leads. T-Money, I don't know who started that, but if I ever meet them, I will gladly punch them in the mouth. It is not true. It doesn't lead anything. My gosh, if you need any more evidence of that, T-Money, NASDAQ's already bullish. S&P's already bullish. Dow's already bullish. They don't give a rip what the Russell has to say. I don't know where that thought came from, that Russell. I've tried to debunk that for years. It is just ludicrous. No, it might be catching up now, to your point, but it's its own world, right? Just as the NASDAQ is its own world, right? You guys know I'm going to tell you, frankly, what has for me worked and not worked. The NASDAQ is comprised of tech, communications, consumer discretionary, semiconductors. The S&P is comprised of tech, financials, healthcare. The Dow is comprised of, and I'm giving to you an order, the Dow is comprised of financials, tech, healthcare, and then further down the list, industrials and transports. The Russell is mostly weighted in regional banks and very, very tiny stocks in terms of market cap that have no weighting in the other three indices. So ultimately, what we want to remember is everything moves for its own reason, right? And this need to say, and the same thing goes to the dollar. Gang, the dollar doesn't lead anything. The yields don't necessarily yield anything. They are telling a story, but let's take this thing out of this belief that one thing has to lead something else. Yes, because that would have kept traders on the sideline from being bullish when the pieces of the NAS were already bullish. And I say this emphatically, it's one of those things that just won't go away. And I hope the inverted yield curve nonsense has also, jumped the shark as well. There's some things that just simply get repeated so often we think they're true, but when we go down and break it to year after year after year of whether or not this is probable, you'll find it just ain't there. All right. So no, the Russell, though, for the Russell's strength is reflecting bullishness. Yeah, absolutely. But just for the Russell. Okay. All right. So next up is Mark. Mark Andre. Hi, HPMR and DPMR, wave, grab candle, Darvis. Okay, we can see our Raghee's charts. I've included in the Sector Secrets Mastery so I can use them on my Trading View charts. Mark, in the Mastery, I give you a layout of specific tools that we use in the Mastery, which include the multi-trend, grab wave, the Darvis 2.0. We have a clearing range tool that includes the Pingala, which is something I've done a free video on in the past, and the indices, NASDAQ, S&P, Dow, Russell for both the futures and the ETF. So that is what's included with the Mastery, not to mention the sessions and the trades and my portfolio and everything else. But as far as indicators go, those are the indicators that are included. So no to the DPMR and HPMR, you get actually the four most requested symbols, which are the indices. All right. Moving on to what platform do I use or recommend to learn futures trading? Is there a course or so a platform is not going to, hey there, Chill Llama, I like the name. The platform is not going to teach you to trade. The platform is going to be specific to how do you communicate your orders to the market, right? Limit orders, market orders, stop orders. But as far as learning futures trading, here's what's really interesting. I've been trading futures since I was 15 and a half years old. So take into consideration, I've traded just when you could route your order to a pit, picking up a phone, then later on, a little bit of internet, and then later on, streaming data, DTN dish. So I've seen a lot of the evolution of where we are as futures trading. And I can tell you this for sure. There's nothing unique in terms of trading strategies for futures, nothing. But there are some characteristics that are unique to futures contracts. Leverage being one of them, and rolling from one contract to a next and rollover gaps are rather unique to futures. The basics of what a futures contract is, first notice date, last trading date, the leverage, and the risk mentality required. I mean, those are all things that I cover in the Mastery day in and day out. So I don't believe that there's a way that I trade stocks, in a way that I trade options, in a way that I trade Forex, in a way that I trade futures. The approach is universal and robust, meaning it works on everything. That's liquid. That's my caveat. And it works well, which is a necessity. And so with that in mind, if you want the basics, let's just call the basics what it is. Lingo. What's a contract? What does the H contract month mean? It's March. What are the trading hours? What is the composition of an S&P? We went back to some of the weighting. Those kinds of things we cover every day in the Sector Secrets Mastery. So if there's some lingo that you want to start with, I mean, you can go to the CME website, the CME group. It's the basics are there. But as far as the how to trade futures, it should not be any different than how you would trade. My comparison is the way I trade crude oil is the same way I trade cocoa, is the same way I trade Cisco, is the same way I trade the Canadian dollar in terms of an adherence to the four factors of the market: price, time, volume, volatility. You apply those things, doesn't matter what you're trading, you're going to be able to decode the psychology, which is really what we're doing, right? That's what makes it so much fun. We're decoding psychology all the time. All right, gang, as always, thank you so much. I'm always going to give it to y'all straight. Don't complicate. Keep it as simple as you can. Understand the weighting and really question a lot of the dogma that's out there, gang. There's certain things that I've been hearing for 30 years plus now, and I'm thinking, wow, that still has legs. And just always question, even things that I'm telling you, question it, right? Once you do a little research, you go back and say, oh, that's where that came from. Now that knowledge is yours. So, what are we doing? It's the knowledge to seek out more knowledge, gang. That's what my mentors did for me, and that's what I hope to do for you. And sugarcoating it is never going to help, right? So, I appreciate your time. As always, it's going to be a wonky couple of weeks. Buckle your seatbelts. I'll see you tomorrow. Same time, same station. Be good to each other.